Brett Knight, Assistant Managing Editor of Sports Money at Forbes. Thanks for being here today.
Thanks for having me. You can tell my voice is a little shot from everything we've been doing at Super Bowl this week. It's been busy, but always happy to come talk sports.
Well, I'm glad you're powering through. Since we are here at the Super Bowl, I was hoping we could talk a little about the way NFL valuations are going. The values have exploded over the last 30 years. Forbes has tracked it. Give us the high level of exactly what's happened.
So when we first started tracking sports team valuations in 1998, most valuable NFL team was around 400 million. Average was less than 300 million. In the time since then, NFL teams, the cheapest teams are worth more than 5 billion. Average is over 7 billion. Cowboys all the way at the top at 13 billion. The increase has just been massive. It's hard to even put into words. It's hard to even track with numbers how much growth there's been across the NFL.
Forbes numbers have been cited in many places. Even bankers have told us on occasions, that they use it in the negotiation process. For those who don't know or aren't kind of intimately familiar with our methodologies, how would you describe the process in which we value teams?
Sure. So we use a revenue multiple approach, which is how most investors in the sports world, most sports bankers value teams. And basically, you tally up the revenue that a team's doing annually. You multiply that by a number called the multiple, which sort of represents how bullish investors are on that asset, or what sort of revenue growth they expect in the years ahead. So higher multiple means more optimism around the business outlook for that team.
Yeah.
The reason I call that out is in the years since we started doing this in 1998. Average team revenues have gone up somewhere 8-9 times, but the actual value of the team has gone up considerably more, somewhere around 25 times. And so, what that really shows is that, boosting revenue, that's great, but also, sort of fundamentally changing the outlook of the team, the business outlook on the multiple side. That's really what's driven a lot of the valuation growth across the NFL.
Let's break that out into two pieces, though, because if I'm a team, obviously I want to do both. I want to boost revenue and I want to have more optimism. So starting off, how do you boost revenue? What areas can you capitalize on?
Sure. So there are local team-specific revenue streams, so things like tickets and premium sales and sponsorships, merchandise, parking, concessions. I mean, the list goes on and on. We track all that stuff. League has seen robust growth across the board, especially in areas like premium sales, so luxury suites, clubs, things like that. But also at the league level, the biggest piece of that is the national media revenue. A few years ago, NFL signed these deals that run for around 11 years, guaranteed the league over $125 billion over that time. That comes out to the last season. Each team received almost $400 million from the league just for the national media rights.
That's incredible.
Yeah, I mean, it's just an insane amount of money, and that's before they sell a single ticket. That's before they play a single game. That's just locked in. Every team gets that equal share of that almost $400 million, and then they can just pile on top of that with national sources like national sponsorship, but also all the local sources. So, at this point, NFL teams are making, $600, $700 million a year on average, and it's only going to continue to increase from there.
So the other side of that is, how do we drive investor optimism in these clubs? And obviously, like you said, you have this tremendous pot of guaranteed revenue, and then it's up to the clubs to kind of sell tickets, do other things. So how do you make a team more buzzy on the investment side?
Sure. Well, I think it starts with those media deals. And one important thing to call out there is the NFL, because they have that almost $400 million and climbing in national media revenue per team each year. For most teams, that represents somewhere around 2/3 of their total revenue for the year. That's just all locked in. That's guaranteed.
Yeah.
And so that has investors, pretty comfortable with whatever risk they're making, whatever price they're paying for a team. They know that money is going to be there. Rain or shine, thick or thin, that money's in the bank for many, many years to come. So there's very little downside to coming into the NFL, and that money is getting to the point where it outweighs, your player expenses, most of your expenses. It's a structurally profitable league, and
Yeah.
It's sort of the only league that's like that in the entire world. As an NFL team, there's basically no way to make money. We've had team executives tell us, I won't use
Steal
the
yeah.
I won't use the salty language that some people have used to tell us this, but you basically can't mess up an NFL team's P&L.
Yeah, yeah. No, and it makes total sense, and we've certainly heard that one before. This isn't exactly the case across the rest of the professional sports landscape, though, and I'm wondering if you can kind of tell us what separates the NFL from the other leagues. For one, this term of replicable revenue is one we always kind of throw around, but how does the NFL different, and why are they king among the major professional sports leagues?
Sure. So they do have some advantages. Definitely the media revenue that we talked about. No other league comes close to the media deal of the NFL. Other sorts of streams like premium seats, NFL is always going to be king in those areas. But it's also on the expense side. NFL has a salary cap that's very predictable. It rises in line with league revenues. So those are going to be capped in a way that sports like baseball or European soccer, those are sort of uncapped. You never know exactly how high the player spending is going to be. So I think in leagues like MLB and the NHL and NBA, you still have teams losing money.
Yeah.
In MLS and European soccer, it's probably more common than not for teams to be losing money on an operating basis. And the NFL is sort of the only league in the world that before you play a game, just stepping on the field, you're guaranteed to make money. Owners, they're not paying in; they're taking money out every year.
So the next thing I naturally got to ask you is, what does happen when you step on the field? We're at the Super Bowl. The Patriots and the Seahawks are playing for the NFL's title. If the Patriots win, if the Seahawks win, are they going to be more valuable when it's said and done? How does that work?
So winning never hurts. Winning's only a good thing. But what we usually see is that a Super Bowl, an individual Super Bowl, is generally going to have a pretty muted impact. A lot of these revenue streams for these teams, including the national media deals, but even some of the local revenue streams, premium seating, sponsorships. A lot of that is locked in years in advance. Those are multi-year contracts, and so it's hard to necessarily capitalize in the very short term on something like a Super Bowl win. You also got to remember that NFL teams don't have local media deals in the way that an MLB team would have. And so, it's not like you can necessarily, capitalize in that way. We think ratings are going to go up because we won the Super Bowl, and so we're going to charge more on the local media deal. You don't have that available to you. So, I think in the case of someone like the Patriots of the last 20, 25 years, that sustained dynastic run, that's definitely going to translate to increased revenue opportunities. Everything from merchandise, which frankly for most teams is kind of a rounding error in the scheme of things, but you're going to see some pops there. You're going to see more tickets sold. You're going to see people want more demand for your premium seats. You're definitely going to see that all come up, but like I say, it often takes sort of a sustained run of excellence for that to really start translating to the bottom line.
Well, to be clear, championship rings and parades are expensive in the short term, but you are right. That sustained run, that brand excellence also plays a role too. People see the Patriots as the cream of the crop in football. But to the point, flipping to the other side of this game, there are people around the league who believe that the Seahawks are now headed to market. They were owned by the late Paul Allen, co-founder of Microsoft. When he passed away, his sister Jody has served as the executor of the estate, and his wish was to sell these teams and donate to charity. As to when, we don't know. The team has denied that they're for sale, but people believe they're going to market, and hard to say exactly what's going to happen, but I'm curious how you think this is actually going to impact the league, or what your expectations broadly would be.
Sure, yeah. I think part of this is the league and its bylaws precludes an estate or a trust from owning a team.
Yeah.
And so since Paul Allen died in 2018, there's always been this question of, okay, when? The league doesn't specify, you have to sell to a new owner by a certain date, but you got to sell at some point. So the question's always been when, not if.
Yeah.
I think where we're at now, the belief around the league is that at some point after the Super Bowl, the Seahawks are going to hit the market. The Allen estate had also owned the Portland Trailblazers. They struck an agreement last year to sell. That's expected to close sometime in the next couple of months after the Super Bowl. And I think the widespread belief is that once that deal is finalized, once that deal closes, the Seahawks should be up for sale soon after. And then we'll see who comes calling, what the price gets up to.
When you think about the future of the NFL, already have gone to such heights, and it's hard to believe that you can even go further than that. But where do you think the growth lies for this league? Obviously, media rights are locked in for a while, but there are some opportunities to kind of bolster that. These other things like premium sponsorship are done on long term, but I'm sure, with different stadium solutions, you can bolster that too. Where do you see the future going here?
Sure. I think the media rights deals that the NFL has locked in, they're currently set to run through, somewhere in the 2032, 2033 range, um, depending on the specific network. But the league has an opt out after the 2029 season. They can actually go to market a little early, and I think the widespread belief around the industry is that that's going to happen. The NFL is going to exercise that right to opt out
Yeah.
and look for new deals. And again, the widespread belief is those deals are going to come in at an even bigger number, just as NFL content becomes more and more valuable. It's really the one the one program on linear television that gets ratings anymore, and so the value only keeps increasing. I think that's probably the area that most people are most excited about. But beyond that, I think we're going to start to see a bunch of new stadiums come online, renovated stadiums come online in the next few years. Titans, Bills have new buildings coming. That's going to, boost some revenue in a big way on that local level. And then, thinking about some new revenue streams, the league's been very proactive on expanding internationally. For right now, that hasn't really translated to a ton of revenue, and most teams are still operating at a loss in those efforts. They're spending more on marketing in these international markets than they are actually bringing in. But the league is optimistic that at some point, whether it's through merchandise sales or sponsorships or media rights overseas, that at some point that's going to start translating to real revenue for domestic owners. And so that's why you see all of these international games being played abroad.
Yeah.
The league has launched this marketing program to sort of prevent every team from marketing in different or marketing in the same regions. They're trying to sort of spread the love around, and so each team has to apply through the league to market in specific countries. But every year you see teams adding more and more markets that they're trying to activate in, and so we'll continue to see more of that. And at some point, I think the league is betting that that's going to pay off.
To your point, Rams and 49ers headed to Australia. That'll be a new frontier for the league. And also on the media side, the stake in ESPN kind of changing the game and how they approach their media strategy is interesting too. What reasons are there to be skeptical about the NFL's growth? Are there any challenges this league is facing?
I mean, I think you have to feel like the NFL is the safest bet in the world when it comes to sports. No team makes money like this league. If you were going to express some skepticism, I think the couple of things you'd call out would be, number one, these prices have just gotten to a point where so few people can afford them. The league is also very strict on who's allowed to buy into the team, what sort of hurdles you have to clear to be able to buy in. And so if you don't have, let's say $2 billion in cash sitting around, don't even bother calling. You're not getting in this club. And so that really restricts the number of people who can come in. The league has tried to address this by, allowing private equity firms, institutional capital to start taking minority stakes in teams, solving some of that liquidity issue. But, I think that's one sort of area of caution, is that at some point they might become victims of their own success, that you just really limit the sort of pool of potential bidders. The one other thing I would say is there's sort of mixed opinions on what the future trajectory of those media rights are.
Yeah.
In a lot of cases, these networks are spending so much on these media rights that they can't ever hope to recoup the cost. Like, it's just going to be a lost leader for them. And they're really doing it as a way to sort of promote the network, stay relevant, promote the other programming on that network. And so, it's an open question. Can these networks continue to build these up and up and up? Right now, I think leagues like the NFL are pretty optimistic about in the near term, medium term, where things are going, that you still have new companies coming in, Netflix, Apple, Amazon, and having those additional bidders is going to keep driving up the value. But logically, theoretically, these can't continue going up forever. There's not just infinite money to spend on sports rights. And so if and when we start to see the NFL rights stagnate, like that will be, one sort of red flag, one sign that valuations might start to slow down. That's something that we've seen in European soccer with some of those European markets. Domestic soccer rates have stagnated, and in some cases, like France, have even fallen in the last few years. And so I think that's in large part that's sort of the explanation for what's happening over there. Whether that actually ends up translating to the U.S., no sign of that yet. But again, we got to wait and see what happens.
Brett Knight, thanks for being here today.
Thanks for having me.